It is 10:43 a.m. Pacific Daylight Time. It's the 14th day of May, 2025. This is episode 1095 of Bitcoin, and we've got some more Samourai stuff going on. This is shaping up to be one of the most interesting things in the world. Thankfully, we're going to talk about it, but we're also going to talk about a switch that I'm seeing in attitudes as to what people think are going to kill Bitcoin next, because apparently nobody gives a shit about op return anymore. That seems to have died, and we're now on to corporate Bitcoin treasury companies being the death knell of Bitcoin. It seems the people that, I don't know, what do you want to call them? The pontificators, the pundits. That's it. That's what I'm trying to say. The pundits of Bitcoin are out in force, and they've completely changed the narrative on at least Twitter. I'm not seeing it as much on Nostr, because Nostr is my safe haven from, well, stupid. But we're going to get into all that. Jack Mallers' company has made a move, and it seems that there are some people that are wanting to run for president in South Korea, and they're all jumping on the Trump "We Love Bitcoin" bandwagon. I don't know if it's going to help them or not, but then we'll move over to Thailand, where their government is, well, going to be stupid. Sorry, but that's just the way that is. It's just, and then we've got we'll have some economic news as normal. There is some news about, well, actually it's not really news as much as we're going to talk a little bit about bond yields and what's been going on with them. Some people seem to think in opposition to what other people think, because most people think it's like, oh, well, the bond yields are rising. And I'm one of these people, right? Bond yields are rising, therefore money is not cheap to borrow, so therefore risk assets slide. Well, we've got a counter argument to that we will get into. And then strategy, well, strategy has told the Financial Times some news. Apparently this interview that Saylor gave to, I don't know, one of these Financial Times guys, it's making the rounds. And not just because of what Saylor said, it's because of the person that was interviewing Saylor from the Financial Times. There are several clips of her just not getting it, but we are going to stick to just the strategy side of that particular thing. I just thought it was noteworthy that we just have so many people in mainstream media that they're just going to die on the hill. There's nothing you can do for them. There's just nothing we can do. Similar's back in the news. The DOJ has indicted some Sinaloa cartel leaders, and it has clearly something to do with Bitcoin. And I will end today's show with yet another final word of warning about being in public and having it known that you either own Bitcoin or you are connected to somebody who themselves owns Bitcoin. Please, 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 when you're going to the new this Bitcoin conference in Las Vegas, consider not wearing swag. Just wear cargo pants and a fucking t-shirt or something like that. You don't need to advertise this stuff, okay? You just don't. It's bad enough being at a conference as it is, because everybody there is a target. But it's the people that wear the swag, I swear to God, because they get separated from the crowd, and they're single targets. They've got no protection whatsoever. But we're going to move over to the Samourai wallet issue. Lola Leitz has written yet another article about Samourai wallet and their response to the Southern District of New York's Moot request. Yeah, we're doing it. The Southern District of New York has claimed that it did not fail to disclose Brady material to the defense following revelations that the prosecutor's office had been informed by FinCEN that Samourai Wallet likely did not need to register as a money service business prior 6 months prior, I might add, to bringing its indictment of the developers. Now, I'm going to pause here just to say, it sounds like I've read this to you before. This is different. Okay, we'll get into it. Just trust me, all right? Hang with me. According to SDNY, the court should moot the defense's request for a hearing to remedy SDNY's actions, as the material revealed was merely the informal opinion of senior FinCEN staff who did not act on behalf of the agency, thereby not constituting what's known as Brady material. Quote, the information the government suppressed for almost a year is classic Brady, argues the Samourai wallet defense in its latest filing to support the hearing request. FinCEN's response to SDNY, quote, precisely echoes the public statement Samourai wallet made about why its business did not run afoul of the licensing and money laundering requirement for money transmitters, the defense writes, providing powerful corroboration of Mr. Hill and Mr. Rodriguez's good faith belief that they were not violating any laws. Quote, prosecutors produced many terabytes of discovery, carefully avoiding disclosure of what they had to know would be a bombshell, the defense continues, describing SDNY's conduct as, quote, proof of the very regulation by prosecution that 2 U.S. senators protested at the time of the charges, that the cryptocurrency industry has decried in letters to Congress and the president, and that is now the subject of the Blanche memo, end quote. Debunking SDNY's claims that the opinions expressed by FinCEN were merely formal opinions of senior FinCEN employees, the defense states that, quote, the fact that they expressed the identical interpretation of the FinCEN guidance as the defendants did in their public statements while they were supposedly knowingly engaged in criminal conspiracy, end quote. Further quote, that FinCEN employees included the one responsible for enforcing FinCEN rules against companies like Samourai Wallet had the same opinion as Mr. Hill and Mr. Rodriguez is, in fact, evidence that they reasonably believed that they did not require a FinCEN license or anti-money laundering controls, the defense concludes. Well, noting that SDNY refers to money service business registration requirements as ambiguous statutes to argue that prosecutors are not required to follow FinCEN's interpretation of the law according to the overturning of the Chevron deference, or, well, the Chevron case, and we'll say a few things about that here in a sec. The defense notes that prosecutors are not allowed to criminally prosecute individuals for violations of ambiguous statutes. I'm going to read that one again. Noting that SDNY refers to money service business registration requirements as, quote, ambiguous statutes, end quote, to argue that prosecutors are not required to follow FinCEN's interpretation of the law according to the overturning of Chevron. The defense notes that prosecutors are not allowed to criminally prosecute individuals for violations of ambiguous statutes. Ambiguity concerning the ambit, A-M-B-I-T, the ambit of criminal statutes should be resolved in favor of lenity, the defense cites, highlighting that violations of ambiguous criminal law must be interpreted in favor of the defendants. Quote, for this reason, the government's continued failure to dismiss this prosecution under the Blanche memo only delays what should be inevitable, the dismissal of the charges as a matter of law, end quote. And that was the defense. The court should set a hearing to discuss the appropriate remedies and not dismiss the defense's request as moot. Okay, so the Chevron deference. It had been the case that courts could defer deference. That's where the deference comes from. Could defer to something like the EPA or FinCEN or the SEC for guidance on how they should proceed, because it is the case that just because you're a judge on a federal court or even at a state court level, but still just judge what Supreme Court, federal court, it doesn't really matter. You can't know everything about everything. At one point or another, you're going to actually want to collect information up about a certain thing so that you can understand it better, so that you as a judge can make a good judgment, or at least a just and according to law kind of judgment, right? But this deference over the years had gotten a little too, well, it got to the point where the courts were like, not only are we going to defer to your expertise to help us rule, we're actually just going to defer to your expertise and let you basically call the shots, right? That was the case. That was the Chevron case, right? And the Chevron deference got overturned, I believe, last year by the Supreme Court, and it was a milestone for us moving into the future so that we wouldn't have to have courts say, you know what, we're just going to let FinCEN decide this. We're just going to let these other people decide this, right? So the ambiguity here is what the court, in my opinion, is what the court, when they're talking about ambiguity, they're like, oh, well, for us, it's ambiguous. We're just going to let FinCEN do this, right? We're just going to let them say it. Well, then when they said it, even though it was an employee, right? Even though it was like a couple of employees, it's still this is the guidance that you're seeking, right? So everything matched what Mr. Hill and Mr. Rodriguez said as to why it is that they believed that they didn't need a money laundering or not money laundering license. That's the government, a money transmitting license, or have to comply with AML KYC stuff, right? What they said about it is exactly what FinCEN said about it, right? So now the court can just like get the guidance from people like FinCEN or whatever agency that would have been deferred to 100% to help make the ruling. Now they're just providing some kind of guidance, which is kind of as it should be, right? But SDNY is just 100% refusing, absolutely refusing. What they're saying is that, well, it was just an employee, so we really don't have to listen to this stuff. You know, it was just an opinion. Well, it was the opinion of employees of FinCEN. Why did you ask in the first place? What, you know, at what point do you do things that don't make any difference, or rather, at what point do you figure out that what you're doing is a waste of time? Because that's it. If the defense is or if the prosecution is correct, and the prosecution said, "Hey, you know, we're going to ask FinCEN what they think about this." Oh, but we really don't give a shit because it was just an employee. Well, then that wasn't a colossal waste of time. Everything about this case is bad. And what I brought to you yesterday is exactly the one of the ways that you can proceed. You know, there are people like Bitcoin Policy Institute that can write, you know, help write amicus briefs as friends of the court to try to help. But really, it's going to kind of boil down to us, you know, I don't know, pestering, God forbid. Yes, I know it won't do anything. Maybe it will. Maybe it will, because the ramifications of this go well beyond just custody of Bitcoin. It goes well beyond that. This kind of precedent is a cancer, is what I'm trying to say. If this passes, if they're able to prosecute Mr. Hill and Mr. Rodriguez after they asked a guiding star their opinion, in this case FinCEN, and then disregarded it because it just, quote unquote, didn't matter, it was just an employee, then all of a sudden we're way on the other side of Chevron deference. You know, it's like you were on the left side with Chevron deference, where the court just said, you know what, if FinCEN, you do it. You figure out the ruling because we don't know what the hell we're doing. Now we're on the other side where it's like it's just open sky for prosecutors. Because now they can just say, oh, well, it doesn't matter. They were just employees. There's no guidance there whatsoever, even though we asked. That's why this case is important. And that's why, even if you think it doesn't matter, just call. Call your rep. Take you 5 minutes. Just log your complaint with the person on the phone, be respectful, be upbeat too. Have it like say, hey, look, this is kind of really important to me because, and you figure it out for yourself. If let's try to look at this a different way. Just pick some scenario that you know about that you might be able to get in trouble on and go to court, be prosecuted by federal prosecutors. What guiding star might they look at given what you know about the thing that you think you could be prosecuted for if you didn't follow some kind of rule or you didn't think there was a rule, but there really was? Who is that and what might they say? And then figure out that in the end, the prosecutor just says, well, it doesn't really matter what they said. They were just employees of the guiding star. They were just employees of EPA. If for whatever reason, the Environmental Protection Agency is going to be your guiding star on what it is that you do. How would that affect you? See, that's what I'm saying. So yes, this is important. It's going to take a lot of us to actually call and write letters and do all the things that I talked about in yesterday's episode. Because Frank Corva's he's got an entire template of a letter that you can write. You can call your senator and you can call your representatives, but don't stop there. That's at the federal level. Go to your state senators and then find your state rep and then call their office and pester them, because chances are good. Think about it this way. If a whole bunch of people called their state rep and their state rep kind of got a bug up their ass, and the state rep starts making phone calls to the federal level, do you think it might be possible that they actually get an audience with the actual federal representative or the federal senator at that level? Because we never get to talk to those people, right? They're too busy. But maybe your state guy does. So hit all of them. We really got to help the Samourai guys out. And I hope Jack Mallers decides to help them out too, because 21 Capital and Tether just bought 4,812 Bitcoin for $500,000. $500,000. Yep, $500,000. This is Oscar Perez from Bitcoin Magazine. Today, Cantor Equity Partners Incorporated revealed in a new filing with the SEC that Tether bought 4,812 Bitcoin for a total of $458 million on behalf of Jack Mallers' recently launched Bitcoin Treasury company, 21 Capital, which plans to eventually go public under the ticker XXI. Quote, pursuant to the business combination agreement, Tether agreed that within 10 business days thereof, it would purchase a number of Bitcoin equal to an aggregate purchase price of $458,700,000, Cantor stated in the filing, with the convertible notes PIPE, that's the ticker, entered into on April 22nd, 2025 by Pubco and the company with certain investors, less a holdback amount of $52 million, and places such Bitcoin in a digital wallet held or operated on or behalf of Tether. Tether is holding the Bitcoin in a digital wallet, which anyone can view the holdings online here. And of course, they are giving a blockchain.com address to that particular wallet. And it showcases further transparency into their holdings, similar to how some spot Bitcoin ETF issuers and other public operations such as Bitwise and Metaplanet have done with their holdings. The initial pipe Bitcoin will be sold by Tether to Pubco at the closing of the transactions contemplated by the business combination agreement upon the funding of the PIPE pipe investments by the pipe investors for a purchase price of $458,700,000. Cantor Equity Partners Incorporated, currently trading under the ticker CEP, is now live in the markets as it works toward completing its merger with 21 Capital. CEO Jack Mallers recently emphasized the firm's aggressive Bitcoin acquisition strategy, stating, quote, "We do intend to raise as much capital as we possibly can to acquire Bitcoin. We will never have Bitcoin per share negative. At least that is our intent. Our intent is to make sure that when you are a shareholder of 21, that you are getting wealthier in Bitcoin terms." At launch, the company will hold over 42,000 Bitcoin, instantly making it one of the largest corporate holders of BTC worldwide, only behind industry giants like Strategy. In a recent interview, Jack Mallers described 21 Capital's mission clearly, quote, "We want to be the ultimate vehicle for the capital markets to participate in Bitcoin, building on top of Bitcoin. So we are a Bitcoin business at our core. It's our founding, it's in our name, it's in our board, it's at our leadership," end quote. This is going to lead us later on into the second half of the show of this switch between op return is going to kill us all to capital Bitcoin treasury companies are going to kill us all. I'm just going to say this right now. No, it's not. Could it end up in a bear market? Sure. It could be another FTX. But no, it's not going to freaking kill Bitcoin. Oh my God. It just never ends with these people. It was like a dog with a bone on Bitcoin Knots versus Bitcoin Core. And now it's gonna be capital Bitcoin treasury companies. It's just fucking ridiculous. But that said, what does Jack Mallers mean that we are a Bitcoin business at our core? Do you develop Bitcoin? I haven't seen that. I mean, Strike does. Strike develops on Bitcoin, but I haven't seen anything about what 21 Capital is doing. What are you doing? Are you building something? What's the product line? There's nothing here. And that kind of makes me want to pull my hair out. But we're going to go over to South Korea, where the top South Korean presidential hopefuls support legalizing Bitcoin ETFs. So be clear about that. Zoltan Vardai, Cointelegraph. South Korea could soon follow Hong Kong in legalizing spot Bitcoin exchange-traded funds, as the country's top presidential candidates have expressed pro-crypto positions. Still, some industry observers remain cautious. Quote, all three major South Korean presidential candidates support Bitcoin ETFs and institutional investment, Kai Young Zhu, the founder and CEO of on-chain data platform CryptoQuant, wrote in a May 14th Twitter post. Currently, Bitcoin ETFs and institutional crypto investments are banned in South Korea, meaning that 100% of the volume comes from retail, according to Zhu. On May the 6th, South Korea's Democratic Party leader Lee Jae-myung promised to legalize spot crypto ETFs, lower transaction fees, and create a safe investment environment so that young people can build assets and plan for the future. The Democratic Party made similar promises in its 2024 campaign, including the legalization of spot crypto ETFs, but progress has been, delayed, according to an outfit called KED. While the crypto-friendly perspective of the leading candidates suggests a promising future for digital asset legislation in South Korea, regulation experts remain skeptical. Quote, the candidates' pro-crypto pledges to push to legalize spot Bitcoin ETFs and reduce fees signal a potential shift, but history tempers optimism. Andy Lian, author and an intergovernmental blockchain advisor, whatever the hell that means, told Cointelegraph, adding, quote, they will take on similar stances as Hong Kong. Whether the ETFs can perform or not depends on various other factors. So there you go. All three of the top, not all of them, but the top three presidential candidates in South Korea right now are all wanting to legalize Bitcoin spot ETFs, or at least Bitcoin ETFs, maybe not spot. What does this mean? It just means they're doing what Trump did. They now, even South Korean leaders understand that the voting bloc of Bitcoiners is an important political force. So first they laughed at us, and then first they ignored us, and then they laughed at us, and they're still fighting us at this point. But at one point or another, that's going to fall by the wayside. It's become too big. once you're a political force, whether you like it or not, once you're a political force to the point that you get down to South Korea and their top presidential candidacies are all talking about Bitcoin ETFs being legalized, then you know it's not as much about Bitcoin as it is about the people who are supporting Bitcoin and their potential votes. And if that makes you feel dirty, why don't you go on over to SoapMiner.com. That's SoapMiner.com, where you can buy handmade tallow soap. There's cedarwood, there's peppermint, there's lavender, there's pine tar. There's a couple of other ones too. And when I get to it, I'll tell you about Earl Grey. He has got a new flavor, Earl Grey tallow soap. There's fresh breeze, there's lemongrass, there's orange and clove tallow soaps. They're all handmade. They're all made with 100% beef tallow. They have minimal ingredients and nothing artificial. I mean, in fact, my favorite soap is the Rough Cut Tallow Soap. It's 3 ingredients, guys. It's like tallow, lye, and distilled water. But all of his soaps are absolutely fabulous. I use the Rough Cut Tallow Soap. Actually, I use any of his soaps to shave with in the shower instead of using shaving cream. It's actually better on my skin. It feels better. I don't get razor burn as much. Actually, I don't get any razor burn after using this guy's soap. So not only can you use it to get the grime off of your political hands, you can get all the crap off of your chin for the low price of $16, and you get 3 4 to 4.5 ounce bars of Rough Cut Tallow Soap for that. And he accepts Bitcoin, because if you don't accept Bitcoin for your goods and services, you're not in the Circle P. And that's what we're trying to do here, is we're trying to get people or plebs to support other plebs with goods and services by buying their goods and services in Bitcoin. And yes, SoapMiner.com, that's SoapMiner.com, accepts Bitcoin directly. Throw in the place where on their cart where you can put in a coupon code. Just type in Bitcoin and you get 10% off of your entire order. Me and Soap have been talking about not doing the 10%. I need to talk to him about more about that, because what he's saying is like, look, man, he's like, I could support you more when you make sales for me if I wasn't doing 10% off. And I just want to be transparent about what me and our vendors are doing, because these are real discussions that we're trying to have so that we can make it feasible for people like me to advertise for people like SoapMiner, who's got a good product. So we'll have to see how that goes. But for right now, as far as I know, you still get 10% off. I need to talk to SoapMiner about this in depth, a little bit of business on air, but transparency in these trying times is critical. Now on to Thailand, where the government is going to tokenize government bonds worth $150 million. Yes, Thailand, government bonds. All governments print bonds, but these guys want to put it on the blockchain. According to the Bangkok Post, the Thai Ministry of Finance has unveiled a plan to issue $150 million worth of digital investment tokens, opening up the government bond market to small investors. What could possibly go wrong? Finance Minister Pachai, no way I could pronounce his last name, presented the initiative during a briefing after the government approved a plan, specifying that these tokens would be launched within the next 2 months. The so-called G tokens. God. When I was a kid, I used to watch an anime cartoon called G-Force, and now it's G tokens, will be used to raise funds from the public as part of the current budget loan plan, because they don't have enough money themselves. Pachara Anutapasiya is the only way I can pronounce it, Director General of the Public Debt Management Office, clarified that these are not traditional debt instruments, but rather an innovation in the country's financial landscape. Jesus, everybody's marketing their crap. Quote, one big selling point of the token is that it allows more retail investors to become part of the digital economy. They can invest in government bonds. Again, what could possibly go wrong? Until recently, small TIE investors were limited or excluded from large investment offerings, which were primarily targeted at institutional and wealthy investors only. Minister Pichai stated that this initial token issuance is designed to, quote, test the market, and that investors will receive higher returns than those from bank deposits, although, he didn't really specify the exact rates. Commercial banks in Thailand offer low interest rates to savers. Currently, 1.25% for a 12-month fixed deposit, lower than the rates set by the central bank, which had kept rates high until recently despite growing economic challenges. The tokens will be tradable on licensed digital asset platforms, which will not be accessible to non-Thai residents. And last February, the Thai securities regulator revealed plans to launch a trading system for tokenized securities aimed at institutional investors. According to the asset tokenization analytics platform RWA.xyz, whatever, the value of tokenized bonds globally has recently increased, currently amounting to $222.5 million. And that's the end of the article. But so globally, there are already tokenized government bonds, but only amount to $222.5 million. The Thai government wants to do 150 million, like just by themselves. So that demonstrates the acceleration that we're starting to see in, yes, all I can think of is cats on the blockchain. It's government bonds on the block. G tokens. Oh my God. Everybody's getting into this, and it's a lot of this stuff is not going to end well. It's just not. I wish it would, but it's not going to end well. I don't like the whole thought of government bonds being, investments at the retail level in places like Thailand, because these are, while they are government bonds, what comes next is going to be municipal bonds, like M tokens. There'll be M tokens, and you'll be able to invest in bonds that are specifically designed to raise money from the public to fix streets, put up stop signs, fix the sewer system. I'm like looking at that going, how is this even an investment? Just because it has an interest rate attached to it doesn't make it an investment. Where does that yield come from? I don't know, man. This is not going to end well. Let's run the numbers. All right, CNBC, futures and commodities. West Texas Intermediate oil is down 0.6% to 63.27. Brent North Sea is also down 0.6% to 66.22. Natural gas down 4.25%, back down to $3.50 per thousand. And gasoline is up a third. Summer driving season about to hit, $2.17 per gallon. Gold is taking it on the chin along with all of its other brethren in the shiny metal rock realm. 2 points to the downside for gold puts it at 31.80 and 4 dimes. Silver is down 2.15%, platinum is down 1.1, copper down 1.7, and palladium essentially moving sideways. Ag is fully mixed today. Biggest winner is rough rice, 3.5 to the upside. Biggest loser is coffee, 2.7% to the downside. Meanwhile, livestock, live cattle is down a point. Lean hogs are down 0.7%, and feeder cattle are down a full 1.5. The Dow skating down 1/4 point. S&P, however, is up 1/10, while the NASDAQ is up almost a full 0.5 point, and the S&P Mini is down 0.18%. Bitcoin is chilling out at $103,080. That is a $2.05 trillion market cap, and we can get 32.2 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,864,482.10. And average fees per block are slightly elevated, 0.06 BTC taken in fees on a per block basis. There are 11 blocks carrying almost 10,000 unconfirmed transactions, waiting to clear at high priority rates of 3 Satoshis per VByte. Low priorities are also 3 Satoshis per VByte. Hash rate has dropped a little bit again. 859.6 exahashes per second is what we are currently at. And we've got a now 2% difficulty increase coming up in 2 days. And let's see, where are we at? Okay, from Free Samourai, yesterday's episode of Bitcoin, and I got Axelrod with 1,021 sat says Psyduck. And Turkey with 1,000 says nothing. Thank you, Turkey, though. I appreciate it, as well as you, Axelrod Double Lot. And Psyduck with 598 says Psyduck. And thank you, sir, with 500 sats says no thank you. Oh, he turned it around on me. Yodel with 444 says another solid episode. Thanks. Pies with 420 says thank you, sir. No thank you. Permanerd with 333 says Oshi is a good dude. Oshi makes good food. NunyaBidness is a good dude. NunyaBidness makes good podcast. My suggestion is that you eat good food and listen to good podcast. God's Death with 237 says thank you. No, thank you, sir. Oshi says fairly concerning happening behind the scenes. It's worth a listen. And he basically is talking about the Samourai stuff going on because he is referencing this particular episode. And that is the weather report. Welcome to part 2 of the news that you can use. Helen Parts gets us going out of the gates from Cointelegraph. Strategy will beat all public equities with Bitcoin, at least according to an analyst. Michael Saylor's Strategy, the world's largest corporate holder of Bitcoin, may become the top publicly traded equity one day, according to a strategy analyst. So, yeah, no bias there. Strategy will be the, quote, #1 publicly traded equity in the entire market because of its future financial strength enabled with Bitcoin. Strategy analyst Jeff Walton predicted in the new Financial Times documentary, Michael Saylor's $40 billion Bitcoin bet. Well. Company currently holds about 568,840 Bitcoin, worth roughly $59 billion. And Walton said that advantage could push it past all other publicly listed firms in the future. It's easy to say shit in the future, dude. It just, quote, strategy holds more of the best assets and the most pristine collateral on the entire planet, more than any other company. By multiples, Walton said. The analyst pointed to the firm's ability to rapidly raise capital as another indicator of its strength. In November, in 2024, Strategy raised $12 billion in 50 days. Let's do that again. Strategy raised $12 billion in just 50 days. It's kind of incredible. And Walton thinks the same thing. Quote, it's incredible. It's incredibly hard to raise $100 million of capital, and they just raised $100 million of capital 120 times in 50 days, and they were able to buy Bitcoin with that capital. That's insane. In the documentary, Saylor also paints a bullish picture of the future due to Bitcoin adoption by Strategy, formerly MicroStrategy. Quote, I think that MicroStrategy is in a position where we can grow from a $100 billion enterprise to a $1 trillion enterprise to a $10 trillion enterprise, predicted Saylor. He also predicted that Bitcoin would one day reach a price of $13 million per coin. Quote, my forecast for 2045 is 13 million a coin. I would think in the 4 to 8 year time frame. Certainly in 10 years, we should be at 1 million. So 1 million in 10 years, 10x that or more in 20 years. Wow, what the hell of a sentence there, pal. Walton and Saylor's prediction on Strategy potentially beating all publicly traded equities in the future come as the company ranks as the 151st largest company in the world, with a market capitalization of $117 billion, according to company's market cap. To become the largest, Strategy would need to surpass Microsoft, whose current market cap exceeds $3.3 trillion. Despite his bullish stance on the future of both Strategy and Bitcoin, Saylor has not ignored the possibility that BTC could suffer major losses. Reiterating his previous claims, Saylor emphasized that Strategy's capital structure is constructed so that it would still be stable even if Bitcoin falls 90% and stays there for 4 or 5 years. Quote, "It would not be a good outcome for the equity holders. The people at the top of the capital structure would suffer because they're levered, but everybody else in the capital structure would get paid out," he said. Okay, so going to have to go watch this Financial Times documentary. Apparently it's making waves all over the place. It's easy to talk about what could happen. It's easy to talk about forecasts when you're not actually backing it up with, actual analysis. There's nothing here. Walton said nothing about what mechanics he used to analyze to come up with these particular, scenarios. Doesn't really matter, because this is one of the things that's feeding into the frenzy over there on Bitcoin Twitter. But before we do that, let's talk about Semler Scientific. They have purchased 1,510 Bitcoin this year alone, and they now hold 3,808 BTC. Semler Scientific now holds 3,808 BTC after purchasing 1,510 coins since the start of this year, according to their Q1 earnings report. Their growing Bitcoin reserve helped generate a 22.2% BTC yield year-to-date through May 12th, despite a net loss, here we go, of $64.7 million. They lost $64.7 million in their first quarter alone. Quote, "We continue to accretively grow our Bitcoin arsenal using operating cash flow and proceeds from debt and equity financing," said Eric Semler, chairman of Semler Scientific. Quote, "And we are excited to launch the Semler Scientific dashboard today on our website." Semler has introduced a public-facing Bitcoin dashboard on its website to provide real-time updates on BTC holdings and key performance indicators like BTC yield, BTC gain, and BTC gain in terms of dollars. In Q1 2025, the company added 894 BTC for $90.7 million, followed by another 616 BTC acquired through May 12th for $59.6 million. The total fair value of the Bitcoin holding now stands at $387.9 million based on prices on May the 12th. The quarter was marked by substantial non-operating charges. These included a $41.8 million unrealized loss from changes in Bitcoin valuation and a $29.7 million loss contingent liability related to an agreement in principle with the United States Department of Justice. Revenue for the first quarter of 2025 was a meager $8.8 million, which was down 44% year over year. Operating expenses, on the other hand, surged to $39.9 million, driven by litigation provisions and audit-related costs. As a result, the company reported a pre-tax loss of $74.9 million. MD and CEO of Semler Scientific, Doug Murphy-Chatorian, said the company's healthcare business is showing early promise from its cardiovascular product line. Quote, "We are expecting growth and cash generation from these FDA-cleared products and services, which will add to our Bitcoin Treasury strategy." Semler also detailed several financing initiatives, including $100 million in, guess what, a convertible notes offering, and a new at-the-market equity program, which has already raised $61 million to date under the latest agreement. So this brings us to the flippening. For weeks, we have had to endure, and even for me, who spends most of his time on Nostr rather than Twitter, and I do spend the preponderance of my time, if I'm going to go to something like, social media, I'm spending it on Nostr. But both on Nostr and especially on Twitter. Right? Twitter is now has just been a cesspool. It is 100% still a cesspool. It's probably never going to end. But the sentiment has shifted. For the last few weeks, we have been dealing with Luke Dash Jr., or Luke Dasher, however you want to pronounce it, Jameson Lopp, Shinobi. All these people have been, every pundit under the sun has been kicking around op return and the lifting of the op return 80 kilobyte or 80 byte limit. And it's going to kill us all. It's going to kill Bitcoin. It's going to destroy transactions, blah, 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 blah. And you're either, and I've heard it earlier today, you're either a communist or you're a Nazi. Get it? Do you see how bad this is becoming? And Twitter is especially bad. And has been especially bad with the core versus knots thing. I described it yesterday, the sniping, actually last week, the sniping that I've seen, the people that I thought, were cordial with each other, the shit they're saying to each other publicly is reprehensible. And now it all stopped because they've got a new bone to chew on. And that bone is corporate Bitcoin treasuries, like what Similar Scientific is turning into, what Strategy is turning into. And with the birth of 21 Capital, a full-blown, pure play crypto company. Coinbase has been determined to be a pure play crypto company, but I don't actually see it as that because they have a service. Their service is to sell you shitcoin, make you poor, and take your money in the process from fees, with the trading fees, right? So there's at least a service there. I don't know what the fuck 21 Capital does. I just don't. They've said a couple of things. I presume loans or something like that is going to be part of it, but I don't know what 21 Capital does. All we really know about that company is that they're going to hold a shit ton of Bitcoin. And up until last week, when I reported that Strategy had a business intelligence based on artificial intelligence project or product that they are going to at one point or another release, they had basically, as far as I could tell, shut down all of their operations as it pertained to writing software or updating their business intelligence code that they had been selling for decades. All right. So there's just nothing there. There's no sales, right? It's a pure, at this point, until they release their AI business intelligence thing, they are a pure play Bitcoin treasury company. And now Bitcoin's going to die because of these guys. And before the op return, right before op return, do you remember what it was? There was no transactions in the mempool. I still hear that a couple of times. Nobody's using Bitcoin. But it's not like dog with a bone kind of thing. It's not like everybody dog piling in. And I can't tell if it's just because this is what gets engagement on Twitter or if it's an actual organic propagation of this new idea of what's going to kill Bitcoin. But through it all, whether it's no transactions in the mempool, whether it's the op return and communist versus Nazi is going to kill us all, and now we're at corporate Bitcoin treasury is going to kill us all of these things represent one thing: fear. It's just fear. It doesn't matter what flavor the fear is. It's like going to Baskin Robbins. They have 31 flavors. All of them are ice cream, except they do have a sorbet. Whatever. I don't give a shit. Chocolate chip flavored fear is still ice cream. It's just like Rocky Road flavored fear. What I don't understand is that we're not even at all-time highs again. And we've had to wait to cross back over the $100,000 mark for quite a while. And yet we're right back into the stink of like it was in 2017, except this time it's actually worse. In the 2017 block size wars, it was one thing. It was SegWit. It was SegWit 2x. It was we need more transactions to be able to be put into blocks, so therefore we need to raise the block size limit. That was it. And then we had forks. We had BSV, or the Bitcoin Cash fork, and then that forked into BSV. All that was basically essentially the same theme. Now we have three different, and that, although that theme was based on the mempool thing. Mempools were too full. At the time, they wanted to change the entire architecture of this entire system simply because for a short period of time, a piece of the system that is Bitcoin was experiencing a thing. In this case, it was the mempool, and it was too full for a little while. For a few months, it was just really, really full. And yet transactions were probably not anymore as expensive as they have been lately. Back then, because the price of Bitcoin was like under $20,000. And now it's at 102 or 103 or whatever it is right now. But at least there was that single theme. But now we're jumping from theme to theme because the op return theme is completely different. It's a completely different flavor. At the time of the block size wars, it was like walking into Baskin & Robbins and they had vanilla. That was it. You wanted ice cream, you went to Baskin & Robbins, you got a scoop of vanilla. That was all that was offered. Here, no. Here, the fear is represented in multiple different flavors. It's the underlying tone that is the only thing that concerns me here. What's going on that these people are trying to latch on to anything that scares the living piss out of anybody else? Because this is not healthy for them. It's certainly not healthy for people that rely on these people for information. It just seems like mass hysteria, and I don't understand it. If you have an idea of what this is, by all means, let me know. Meanwhile, the DOJ indicts alleged Sinaloa cartel leaders as blockchain firms trace crypto links to the fentanyl trade. Yay, Naga Ivan Namayo is writing this one for The Block. Pedro Inzunza Noriega and his son, Pedro Inzunza Coronel, are accused of leading a massive drug trafficking network for the Beltran Leyva organization, a faction of the Sinaloa cartel, according to U.S. Department of Justice indictment unsealed this week. While the charges focus on trafficking tens of thousands of kilograms of fentanyl, cocaine, methamphetamine, and heroin into the United States. Whatever happened to just plain weed? I guess because we legalized it in a lot of states. Anyway, blockchain analysis firms are separately tracing millions of dollars in crypto tied to fentanyl production and cartel-linked payments. The charges follow President Donald Trump's foreign terrorist organization designation order signed in January. The FTO allows the government to seize crypto and other assets connected to cartel agents. Although the DOJ's case against the supposed cartel bosses is based on illegal drugs and trafficking, blockchain analytics providers like Chainalysis, TRM Labs, and Elliptic have recently found links between stablecoins and fentanyl proceeds. Pausing to say this: do you want this package wrapped in it's for the children, terrorism, or drug trade? This is what I'm smelling right now. Chainalysis traced $5.5 million worth of stablecoin used by Latin American drug cartels to pay Chinese-based fentanyl manufacturers. U.S. authorities in the Eastern District of Wisconsin eventually seized the funds, according to a Chainalysis March crime report. Some cases have involved official sanctions from the U.S. Treasury Department's Office of Foreign Assets Control, or OFAC. In September 2023, OFAC blacklisted Ethereum wallets associated with alleged Sinaloa cartel member Jimenez Castro. Elsewhere, TRM Labs released a study that revealed that most Chinese fentanyl precursor vendors in 26 cities accepted crypto payments. According to Elliptic, illicit drug producers received millions of dollars in digital currencies amid the U.S. fentanyl epidemic. A separate Chainalysis report released in 2024 said chemical shops suspected of brewing narcotics have received $250 million in crypto since 2015. All right, so this is a potential exit strategy for the United States government. They're always going to do stuff like this. What am I talking about? Drug trafficking, and it's related to crypto. Now, at one point or another, you can think of it like this. It's like a parachute that you just keep on the wall of the airplane you're flying in. As long as everything is good, that parachute stays on the wall. But if something goes south, all of a sudden, the hatch opens and you pull the parachute off of its rack, you put it on, you jump for dear life, and you pull the ripcord. That's what these things are. Who knows if this is actually true? Is it actually true that Sinaloa drug cartel has taken stablecoin? Even if it's not going to stop the trend. It's just not. All right, last up, Paris kidnapping attempt highlights growing threat to crypto figures. This is your final word of warning. Decrypt, Cal and Quinn is writing this one. A woman and her child, both relatives of a leading figure in France's crypto industry, were targeted in an attempted kidnapping in Paris on Tuesday. 4 masked individuals ambushed the family near the 11th arrondissement, according to police sources cited by France 24 and the AFP. 3 of the assailants reportedly sprang from a van and tried to force the woman and her child into the vehicle. Her partner was assaulted as he tried to intervene. The woman managed to disarm one of the attackers and toss the weapon away, triggering a commotion that attracted bystanders. The group then fled, and the van was later recovered by authorities nearby. All 3 victims sustained minor injuries and were taken to the hospital. Authorities have confirmed that the woman is the daughter of the Paymium co-founder and CEO, one of the earliest crypto exchanges in France. The latest incident adds to a string of violent crimes targeting crypto-affiliated individuals or their families. Even those not involved in crypto and held for ransom have found abductors demanding payment in crypto. The public tracker, run by security firm Casa CTO Jameson Lopp, has recorded 22 physical crypto-related attacks so far in 2025, occurring in France, Spain, Hong Kong, and elsewhere. France alone has seen 6 such incidents this year. In January, Ledger co-founder David Balland and his partner were abducted in France, with Balland's finger reportedly severed as kidnappers demanded crypto as ransom. 9 suspects, including the alleged ringleader, have since been apprehended. A separate case in early May involved 7 arrests after a man was kidnapped to extort cryptocurrency from his wealthy son. That victim also lost a finger. On New Year's Eve last year, the father of a crypto influencer was held hostage in St. Genès-Pauli, I can't pronounce French stuff, in a ransom attempt. Then we go beyond France, because the trend is global. In March, a Chinese-Filipino steel magnate named Anson Q was killed after kidnappers demanded $20 million in crypto, and authorities had already provided $3.5 million. An investigation is currently ongoing. On to Hong Kong, where a Turkish man was ambushed during a multi-million euro crypto deal, the latest in several examples of cash for crypto trades gone wrong. And in Brazil, a Spanish businessman was drugged and abducted by criminals posing as law enforcement. They demanded $50 million in crypto and held him for 5 days before he was able to escape. Please be careful, because it just gets worse from here. As the price of all these things go up, Well, it's just going to get worse. Do yourself and all of your loved ones a favor, because it's not just about you, man. It's about anybody you're connected with, anybody who would feel your loss as a negative in their life because they're still alive. You have to consider them. You have to. It's your commitment to being part of the human race to be responsible to those who love you. And it goes well, at this point, it goes well beyond making sure that you don't have heart disease by not doing bad shit for you. And maybe you should go work out more or take walks, keep yourself healthy. It goes way beyond that at this point, especially if you're in this kind of industry where the hype just makes everybody freak out. Though we demand 50 million in crypto. What kind of crypto? Like, do you think everybody walking around has every kind of crypto? It's a lot of this, a lot of the criminal side of this is driven by the same kind of hype. It's sort of like the Black Mirror image of fear of missing out. You don't have any money to get any for yourself, but this crypto thing is going to go bonkers, so you got to get some somehow. So you're just going to pull some dude off the street wearing a Bitcoin shirt because clearly they own Bitcoin. Don't let yourself be a target. Stop wearing the swag. Again, my apologies for all the people that create the swag. I'm not after you. But we're not doing ourselves any favors when we wear orange shoes, orange socks, orange pants, orange shirt with a B on it, and a big orange hat also with a B on it. You are essentially saying, please kidnap me. And unless you are prepared to arm yourself and take personal defense training, and even then, you're not going to personally defend yourself against 15 people who want to throw you in a van. If 15 people want to throw you in a van, you're getting thrown in the van. I mean, I don't even think Jean-Claude Van Damme could even do anything about that shit. So please, when you go to the Las Vegas conference or any Bitcoin conference for that matter, please at least reconsider wearing Bitcoin or any kind of crypto swag. Just look like your ordinary guy. Practice good operational security, be safe, and I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.